Cool off from the top is what we're getting on the large cap indices. Let's just see what's leading to it. Not too much. I mean, okay, maybe an HDFC's cooled a little bit from the top. Infosys, Reliance, all your big boys are saying, okay, a little easy. Now it's time to start winding down for the day. Maybe that's all there is to it. Let's get some trades in then. Ashwini and Mitesh with us. Ashwini, what would you do in the last half hour?
See, I think Europe is trading at the highs of the day. And if that kind of leads to some sort of global move, etc., and it's high time that it happened, I think even taking home Nifty, Bank Nifty positions may not be such a bad idea. Having said that, individual stocks, Bajaj Finance is a buy with a stop of 2600, target 2720. Biocon is a buy with a stop of 618, target of 640. And Diwan Housing is a buy with a stop of 238, target of 252.
Right, Ashwini, we'll just come back to you in a minute. A couple of these cement stocks are moving higher. Shree Cement is the one which has suddenly moved to the high point of the day, so just keep that on your radar. Mitesh, your calls: buy today, sell tomorrow, sell today, buy tomorrow. What would you do?
No, we'll maintain a positive bias. In fact, I have picked up two pharma names as BTST call, not even a positional buy, short-term buy, just a BTST for a day. Cipla can be bought with a stop at 519 for targets of 531, and Cadila can be bought with a stop at 343 and look for a bounce to about 353 kind of zone levels.
All right. So we'll talk about the cement stocks itself. Dipen Mehta is still with us on the show. We had a lot of these cement stocks move higher. Ramco Cements is now moving higher from the lows of the day, up about 2% for Shree Cement. Dipen, you know, post-monsoons, people thought perhaps there could be the price hike which would come November. There was a mild price hike. That too was rolled back. December, not a big month for cement demand. As we go into the second half of this fiscal, do you think that awaited price hike would come? Cement demand would increase ahead of the election year. How would you approach the cement pack?
I think we have to be selective in cement and go for companies where there's M&A action or large expansion going on stream, and likes of Ultratech Cement certainly come to mind, given that they have acquired new cement capacities, and then there's the benefit of turning around and making these new acquisitions more profitable, increasing their capacity utilization and improving the margins for new cement plants. So that could be an additional trigger for a stock like Ultratech Semco. So as I said, be a bit selective. But then on the whole, cement is a kind of a steady state performer. Typically you get 8 to 10% type of top line growth and 10-12% type of bottom line growth. And there's not much scope for the stock prices to go down or to move up. So you have long periods of sideways movement for cement companies. The better, I think, way to play the cement industry rather than the building industry is to go for companies which are into building materials, say ceramic tile manufacturers, or even electrical companies like say Havells, or even appliance companies. I think they all follow the same investment theme of increased spending on residential, as well as better kind of renovation going on with residential flats. So that's a more interesting investment theme to track than cement per se.
Okay, since we're talking cyclicals, I'll extend that to commodities as well. Today's been another good day for most of the ferrous stocks, steel stocks. Pull up SAIL, for instance, it's up 5%. And of course, the big boys, Tata Steel, JSW Steel, all are up between 2%, 1.5 to 2% as well. Even Jindal Steel and Power is up and about. So steel has done well today. Before we let you go, Deepan, thoughts here? Do you think that, you know, this upcycle will resume in 2019? Would you look at buying steel stocks at all?
No, not really. I think that if global growth does slow down, and what we are seeing in US as well as China, I think steel prices may remain under pressure. So investors should get a bit cautious over there, and any upswings like these could be a good opportunity to exit out of steel stocks. Anyway, it's a very cyclical industry, and a lot of volatility is there in the earnings because of end product price movement. So only if you're an industry insider will you tend to be able to get the cycle right. But for a large number of investors, I think cement has not really been a great value creator.
Okay. All right, Deepan. On that note, we'll let you go today. Thank you very much for joining in. Have a fantastic last weekend of 2018, and we'll catch you with the market again soon. Well, on that note, let's get you some more market opinion as we're talking about longer-term trends for 2019. Earlier in the day, we caught up with Sanjay Dutt of Quantum Securities. He says 2019 is going to be the year of emerging markets, especially India. Here's more.
2019 is going to be the year of the emerging markets, and more so India, because if you look at how the dynamics have played out, we've had huge outflows in 2018, but close to, in the range of about $40 billion or nearby is what domestic liquidity and domestic investment and savings have supported the market. We haven't fallen off the cliff with such massive outflows. Now, if in 2019 we are going to get some amount of inflows, which I'm reasonably sure in the emerging markets, because the way mature markets now are more or less plateaued out and are having their own problems of slowdown and various other trade war issues, etc., we, being a more internal market in terms of having very strong domestic growth itself and not that dependent on exports or the international markets, would be a natural choice for investors worldwide to deploy money. And I think the overriding reason why I think India is poised for a very good year or two ahead is some of the fundamental reforms that are falling in place. Forget, the fiscal deficit has become 117% of what it was, etc., etc. That's all this 3, 6, 12 months, a kind of an adjustment. But as an investor, if you look back, some of the structural changes that have been done starting from the UPA government and carried forward into the NDA government, whether oil pricing, the fuel, oil subsidy issues, pricing. No one blinks an eye when, oil prices change every day versus what we were. Whether GST, the IBC, the NPAs have now more or less, absorbed and dealt with. I'm not saying they've all been sorted out, but they've been absorbed and dealt with in bank balance sheets. Corporates have tightened themselves. So I am very confident that the next 2-3 years are the years for the equity investor.
Consumption growth was expected to be the main driver for this market in the last 2 years. And now we've seen a genuine slowdown there. I mean, if you talk about autos, dealer inventory levels are as high as 12-13 weeks right now, we hear. And there's definitely a talk of some slowdown, especially in rural, etc. How would you deal with that piece?
I think what we are seeing is a short-term phenomena. And we are seeing this in pockets where we're having problems. And we were bound to have these because we could not have month-on-month numbers going on for 3 to 5 years. We could not have, Eicher Motors or Maruti or something just carrying on with that at that breakneck speed. We needed a pause. Now, whether that pause came in because liquidity tightened or because the consumer sentiment became negative in the last few months because of internal political and other dynamics that we've had here, I think that was mainly led by some liquidity issues, some fear that the economy, and actually on-ground economy having slowed down in the last year or two. We've seen the numbers, whether we say it was because of the long tail of the GST impact or demonetization impact. But like I said, most of that has been absorbed now. And autos may not immediately revive in the next 3-6 months, but I think consumption story overall is robust.
The other sector that Sonia tracks very closely is aviation. And even over there, after months of fairly good performance, 15% passenger growth, we have begun to see 2 consecutive months of 12 and then 11% passenger growth. When we connect these dots, we worry about consumption. But do you think even that's a passing phase?
There has definitely been a problem in the last 6-12 months. We are going to have, maybe even this quarter is not going to be good for most of the companies. But I think that's what is reflecting in the prices, why we are seeing such negative sentiment, and we are actually now discovering value in a lot of sectors and a lot of conviction buys is primarily because of that. I think that story has played out now.
Which pocket do you think could be the leader in 2019?
Frankly, I think the big story for the next year or two is going to be capital goods, followed by PSU banking, then insurance and healthcare are looking very exciting for the next 2 years. Good quality, those top 4 PSU banks have kind of been written off by the market and written off by investors. I think there is a big play in there because now whatever we'll get FY20 onwards are going to be primarily write-backs, because I don't think any chairman of a public sector bank is sitting with any NPAs which he's hidden in any manner. I think he is more than adequately provided and is reflecting a true picture of his books, because no one wants to really carry anything that's hidden and then get the rap from the RBI. So that's, I think, off the table now. So therefore, the only thing that you'll see in PSU banks is going to be better lending practices, and good, recoveries coming in. So these 3-4 themes, I think, are going to be very good for FY19.
Come off from the highs of the day. In fact, for the Nifty right now, sitting at 10,850 thereabouts. When we started the show, it was closer to the 10,900 mark. And the stock that took it higher is the stock that is taking it lower. So ITC has come off the highs of the day. And we have big boy Reliance too, which is about 0.5% off the highs of the day in just the last 15-16 odd minutes. So we have Reliance, ITC, as well as Kotak Mahindra Bank, which is now down by about 0.4%, but majority of those cuts have come by just right now. But the mid-cap end of things, that's looking pretty good. So we have, I think we have Jubilant Foodworks. That one should come up for you. That one's seeing some bit of sell-off. But REC and PFC, both those stocks have been unusual stars of this month, up 22-23% in this month itself. So let's see what happens out there. And commodity stocks, they're doing fairly well. SAIL is up about 6% as we speak. On that note, we have Dilip Bhatt, who's the joint MD at Prabhudas Leeladhar, joins us on the show to give his outlook in 2019 as well as what took place in 2018. Dilip, you were pretty, confident of the commodity space over the next 4 quarters. Do you hold that? And the IT space, you believe, is done. There is ambiguity. It's given you 23% this year, the IT index. Do you think it's time to shift the wealth into commodities?
Well, I think as far as the commodity goes, I think the oil has led a major decline for the commodities. And I think in sympathy with that, we have seen that all-round decline in the commodity prices. But I think within this pack, the steel sector still looks pretty good and pretty solid. And I think within that space, even Tata Steel looks pretty interesting for us. So I think when you talk about commodity as a space, I would say that it's more to do with very specific commodities, and in that pecking order, possibly steel comes into the play. And as what I said, that Tata Steel looks the best of the lot. I think the other steel companies are also good, but they have possibly got too much of capex around them, which possibly will weigh quite heavily with the investors. Coming to the IT, I think, yes, IT had a solid tailwind, but over there, we have yet to find a very secular growth story in terms of volume or in terms of pricing. So that is not very clear out over there. So that's why IT possibly will at best be a defensive play rather than be something which one can bet on to get a great returns.
Speaking of IT, there's an interesting reversal on TCS. It's causing a bit of a dent on the Nifty as well. Days low on that stock, so it's really reversed course. Let's just pull that up. Yeah, that's the decline that we've seen in the last 1 hour. Let's pull up its twin, Infosys, as well, and just do a chart check on that one. So these are some of the names that have done well in the week, but of course there's some selling on TCS, which is quite apparent as we speak. Dilip, thanks for joining in. Always good talking to you. I was just watching all this, buying that's taking place on Avenue Supermarts today. It's obviously a sort of light volume, so maybe it's just more accentuated moves. But speaking of retail, and all this talk about e-commerce, we were speaking to Mr. Biani also yesterday. Would you buy any specific retail stock for 2019?
Sure, I think as far as DMart Avenue Supermarket goes, I think it's really in a different zone altogether. No doubt it's exorbitantly expensive, but then it is typically in one of those cases like Levers or any of those, or Nestle's of the world, where the valuations are something which is not really very dominating in terms of the investments. So I think people still prefer that. It's largely because of the growth. But within this space, I think apart from Avenue, I would still say that Future also looks pretty interesting, because this is a space where we will see a lot of action happening in the coming days as we move towards the GST in a full phase. And with proper implementation, I think the organized retail is something which will have a better traction and better growth, and will continue to see a better footfalls out over there. So I think this sector still looks pretty interesting, and these two stocks, especially in the Future group, looks pretty good.
All right, you're talking about the retail space. The consumer space itself is looking pretty good. Looks like people suiting up ahead of the New Year's party. Raymond should come up for you up at the high point of the day. Along with that, Raymond is the one which has moved about 0.5% in the last 5 minutes or so. For the day, up around 1.5%. And there you have Raymond. Along with that, Titan is something that we've been talking about already. It's extended its gain up about 4.5%. And Nestle, Dilip spoke about Avenue in connection with Nestle in terms of its valuation. Nestle up about 3.5% as we speak too. But Dilip, your view on a couple of these REC, PFC kind of stocks, both of them have moved 22, 23%. There is that amalgamation merger, so to say, takeover of REC by PFC impending. Would you look at these stocks, or maybe this is just a trading pop for this month, which was up about 20, 22%?
Well, I think they continue to be, very closely haunted by some of those government policies and some of the news that keep on coming in the PSU space. And so you find that both these companies are really trading very cheap at the moment. But despite their cheapness, I don't think that there is any great interest at the moment. And as what you very rightly said, there could be some trading bets here and some trading bets there. On a secular basis, no, I don't think we are looking at both these companies at the moment for an investment, for the purpose of investment. But from the current levels, I would not really be too keen to recommend any of these stocks.
Okay, guess no one's having pizza as we get into the weekend. Is that so? Because Jubilant Food is still up 1%, but it's facing some pressure. That is one stock that's kind of on the decline.
As far as Jubilant Foodworks is concerned, if you take a look at the last 1 week, the stock has been under a bit of pressure.
Yes, it has.
Been
6%, I think.
The biggest reason for that is the valuation at which Swiggy raised some money. Swiggy last week raised $1 billion. And if you remember, go back to the second quarter earnings conference call that Jubilant Foodworks had held. At that time, the management has said in the previous quarter, they witnessed an intensity in the competition coming in from online players and aggregators. That was when Swiggy hadn't even raised some money. Now that Swiggy has fresh $1 billion in its pocket, let's see what it does to disrupt the scene. Actually, what happens is that more than fundamentally, when these guys get a lot of money, they hire a lot of people. So that increases the cost of manpower acquisition for Jubilant Foodworks. And the company has been on a cost-cutting spree, the levers of which are tightening. The stock has seen a big move. So let's see what happens.
And they've done this dramatic same-store sales growth over the last, at least 2 quarters, right?
Last 4 quarters. So last 4 quarters,
plus
the
is what they've been
the same-store sales growth has
Yeah.
been 18, 25, 26 and 21%. So on that base, can that grow or not is the big question. That is Jubilant Foodworks. We take a short break, come back, be in time for the closing.
Okay, we're counting down to the last 5 minutes of trade this Friday, the last week of the year, almost the last week. Really don't count Monday the 31st. Dilip, okay, so let's talk big. 2019, key idea beyond the Nifty 50.
So you said 3 ideas?
Key idea. 3 is even better, but key or 3 ideas beyond the Nifty 50.
Well, I think may not necessarily be the Nifty 50, but I think ICICI Bank looks pretty good and interesting. Bajaj Finance looks pretty good. I think Larsen & Toubro is another stock that looks pretty interesting. These 3 stocks look very compelling, and I think there is a good long-term story in all the 3. Probably we'll possibly see a good compounded 15 to 18% bottom line growth in all the 3 stocks for the next 2 to 3 years.
No, Dilip, that is the Nifty 50.
Interesting from the
That's the Nifty 50. That is the, that's the main team. I'm talking about the India 19 team, the mid-cap universe. What are your key ideas there? The maybe one mid-cap gem that you have in mind.
Okay, I think as far as the mid-caps are concerned, possibly a couple of stocks that look pretty interesting for us at the moment. I think one is certainly going to be Britannia. I think Britannia is something which has been there for quite some time. And I think Britannia is still going to continue its good growth story for next 2 to 3 years. I think the second stock that comes to our mind at the moment is Ashok Leyland. I think Ashok Leyland is another stock that can give very good, very decent returns over next say 12 to 18 months. I think there's every possibility that Ashok Leyland's volume growth will continue to be good, and the bottom line growth we expect will be more than 30-35% for next 2 years, and possibly this can give about 35-40% return. I think third stock which I would like to pick is Confidence Petro. I think it's about 1,000 crores market cap. And that's another company where we feel that the growth is going to be very good and solid. They reported about 24 crores profit for March 18. But I think in the next 2 years, we'll see from 24 crores, it can go past 100 crores by FY20. So these three stocks look pretty interesting from the current point of view.
All right, we've spoken about your stocks. You spoke about Britannia. I am a big fan of their products. Which is your favorite Britannia product, Dilip?
Well, I think the Britannia has quite a host of them, so probably we consume all of that very regularly. The Britannia Rusk that we have, apart from the good days that we continue to have.
All right, on that note, we'll say have a good day, Dilip. Have a good day. And as you go into the next year, they have a whole lot of other products as well. They'll get out with their Britannia croissants, etc. So
I've been hearing you say that for so many quarters. I'm still waiting for that to actually
They said the third quarter FY20, so let's see how that goes. FY19 rather. So let's see how that comes by. But a couple of stocks, they're moving higher. Page Industries up around 5.5% as we speak. And Sun TV, I believe that, just about 3-4 hours ago, YouTube was hit by the new Rajnikant film trailer, Petta, which is produced by Sun TV. So that stock has moved about 5% higher as we speak.
Oh, and Rajni is at play. That's it.
10
You don't
January
need anything
is the day
else.
that movie releases.
Yeah. Okay, all right, gentlemen. We are winding down. Let's quickly recap the trades of the day, and then we'll take final thoughts with our guests as well. Not a bad day at all. You're slightly off the highest point on the Nifty, but nonetheless, 10,859, 860 is the kind of level that we're closing out at. 250-point gain for the Sensex. The mid-cap index also batting strong, 1% up on that index as well. On the large-cap side, fantastic day for Titan. It's sparkling as we get into the weekend, 4.5% up on that stock. Sun Pharma, consistent buying today, 3.5% out there. Actually, the oil marketing space is very, very diverse. Check out IOC, which is up about 3%. And then look at a BPCL, for instance, which is down, negative almost 1%. So divergent trends for a change. Again, financials were looking okay. So Bajaj Finance, 2% on the higher side. Pull out the banks like Yes Bank, 2%. The big boys, ICICI Bank, 1.5%. The HDFC twins continue to support the market throughout the day as well. Even Axis was higher. So financial is not a problem area at all in the market today. Some buying on Tata Motors. Consistent buying on metals as well. So whether it is a JSW Steel or a Hindalco or a Tata Steel, most of these stocks held on to gains throughout the course of the day. If I talk about the weakness, then Coal India was very consistent with its 3% drawdown. We've seen weakness on a couple of names like Bajaj Auto as well. The ones that stand out for me are going to be the IT twins, the big boys, both TCS and towards the end, even Infosys has turned negative. Profit taking coming in on both of these names. So let's see what they do as we get into trade next week. But that's the large cap arena. No problems there. 80 points higher on the Nifty. Mid-cap smuggler, not a bad day either.
Not a bad day. In fact, a very good day for the mid-cap index, up about 160 points. And a couple of stocks that were up from the word go and maintained their uptake through the day. We have Lemon Tree Hotels, and that was up around 10%, ended 10% higher. Along with that, we had the whole holiday theme doing fairly well. So Mahindra Holidays too, not too bad, up about 7%. Along with that, we had the shopping stocks as well as the retail stocks doing fairly well. So Shoppers Stop high by about 6%. We had Avenue Supermarts high by about 5%. Future Retail had a down day at the start, and then it recovered in line with all the retail stocks out there doing fairly well. A couple of these apparels doing well too. Page Industries up about 5.5%. Along with that, we had Raymond too, which is ended closer to the higher end of today's trading session. A couple of these media stocks doing very well as well. Sun TV, pick of the lot in the F&O space, up about 5.5%. And interestingly, all the ADAG stocks, they surged in today's trading session. So be it Rel Infra, Reliance Capital, or any of the Reliance Anil Ambani group stocks, all of them gaining anywhere between 4 to 5%. Then REC PFC, they continued their up move for the umpteenth time in this month, now up around 20 to 23% for both REC as well as PFC. Oil India, December series, not too good for them. The stock was down 15%, but first day January series up around 7%. CG Power up around 1.3%. 7% as well. Stocks that did not do too well, HCC is the one which lost the most from the F&O space, down about 3%. Remember, the stock is down about 70% from the start of this year. So ending the year just the way the whole year has been for this company. Kaveri Seeds too lower by about 1.5%. Pidilite lower by about 1%. Interesting, given crude did not move too much, in fact was contained. And then you had Future Enterprises that lost in yesterday's trading session as well, lost in today's trading session as well. Info Edge not doing too well, and along with that we had Just Dial as well.
Okay, so there you have it. That's the wrap of the day. Not a bad week also. We've actually ended positive for the week. So interesting, truncated 5 days, actually 4 days that we went through. Ashwini and Mitesh are also with us. Let's take final comments then. Ashwini, given the trends and perhaps even lower participation on Monday, what would your advice be for trade?
See, last week, the week before this one, we dropped off and made highs of about 11,000 on the futures on Nifty, 27,500 thereabouts on the bank Nifty. Now this week we've cleaned up all that weakness and almost closed at the previous week's highs. So my sense is that if global markets do well overnight, then Monday itself you could have a big breakout above the previous week highs, and that could provide a bit of impetus, because now the corrections are not even able to last for about 4 or 5 days. So that way, the buying or the support is continuously rising, and it is only a matter of time once 11,000 or 27,500 gets crossed. It could be Monday as well, because sometimes these things can happen much more easily on lower volumes.
All right, fair point there, Ashwini. In fact, as we speak, the European markets continue to gain ground and at the high point of the day. And from the looks of it, Dow futures not too bad as well, 50-point uptick. Mitesh, would you concur with Ashwini as far as the Monday's move is concerned? Do you think there could be a gap up and that could continue to be there, and maybe 11,000 in the first week of 2019 again?
See, I think difficult to guess a gap up or a gap down, but the trend remains positive, so we're trading with a long bias. I think, yes, we have targets beyond 11,000 as well. If not in the first week, possibly as we approach the result season by the 10th or 11th, we might be closer to those levels, unless until we see the index breaking below 10,800, 780 zone. So for the timing, I think stay positive and look at 10,950, 70 as your first zone, possibly 11,080 as your next target.